Robert.
Okay. Hey, Robert. Sorry, I was just jumping over to change the chart there to our first one, but yeah, thanks for the intro there, Scott. Also, before I get into with Robert, we got Scalp Trader with his latest portfolio update. We might be bringing him on in a little bit, so we'll keep you posted on that. But first, want to break in with Robert here. Robert, how's your day going?
Good. Actually, I just wanted to sort of just follow on what Scott was saying. That yeah, emerging growth. He's totally right. The fourth quarter last year, these stocks have just gotten killed. But it's kind of the rankings have gotten generate some pretty interesting names over the last month or so of names that might be good for like turnaround candidates. So I would definitely keep an eye on those rankings if you can.
All right. So with that, Robert, we've gotten into a nice little routine here where you'll lay out a couple of plays for us. In particular, the last 2 weeks we've been talking about some of the ads onto the growth list. So wanted to break into that. But first, the first one I believe you have on here, Fortune Brand Homes and Security. They weren't an ad onto the GROWX list, were they?
That's correct. No, that's just a separate thing that I was...
This basically is simple FBHS, Frank Boy, Harry Stephen. Is the ticker.
That's right. Yes, but I just wanted to make a quick note. This one. It's a good example of what people should do is to try to look for trends, and this is a good example of that because what they do, just a step back, is they do like plumbing, cabinets, and doors and security. They own like Moen faucets, Perrin and Rowe. They own Master Brand cabinets and Master Lock for doors and security. Excuse me there. So basically, they're a home remodeling company. So if you're going to do a remodel on your home, if you're really going to redo a bathroom, maybe redo a kitchen, Fortune Brands is you might be buying some of their products. So they're basically a play on remodeling. And we notice a trend where a couple of other companies that were in also, they do different things, but they were kind of in the general remodeling category. Like, for example, like Sherwin-Williams a few weeks ago guided sharply lower. Like, it was just scary how much they guided lower. Floor & Decor, which is known for putting up consistent big numbers, they also were concerned, like, the consumers pulling back. My sense is that, when those 401ks got smacked in the fourth quarter, a lot of home improvement projects got put on hold. That was the way I took it. Higher interest rates too also play a part of this. People often use their home equity lines for home improvements. So as those rates went up, or maybe they had more difficulty qualifying for a loan, that would help determine whether or not they would actually go ahead with these home improvement things. So kind of my point here is, if you notice a trend like that, it's always good to try to establish, okay, what else could this affect? And that's why I was concerned with for going into the Fortune Brands earnings yesterday was, all these other home improvement stocks have been guiding sharply lower, so just be careful. And that's exactly what happened here with Fortune Brands. They're saying the consumer pulled back precipitously in the fourth quarter in terms of home improvement projects. So it's just something to keep in mind as an idea. And also at Briefing, we're also open. If you ever see trends that you think are worth, to bring to our attention, we'd really appreciate that. My email is rreid@briefing.com. If you notice, like, for example, like a couple of companies in one sector are guiding a certain way, or they're talking about something on the call, this might affect other stocks in that sector. So anyway, if you see anything like that, please reach out to us. We really appreciate the heads up on things like that. And so anyway, just was just a good example of to keep that in mind as we're going through earnings season.
Okay, and for anybody interested in Rob's FBHS post, he had put this up at 9:03 earlier today. And there's a nice little rundown of the name. As you can see, it's been pulling back. It's had a little bit of a spike at first, but it's pulled back off those lows and back below its 100 here.
Yeah, I think it was that strong jobs data this morning. Okay. So I think investors are probably thinking, it might boost investor confidence or home. People who have homes, they might actually go ahead with home improvement things. So I think that's what helped it today. And also the stock's been trending down over the last year, so maybe there was a lot of negativity going into this report. But they did have a huge miss. It was an 8-cent miss, and they got it down for 2019. So the numbers were not good. But
right. So it is interesting to see the price action, though, right?
It is.
Seeing it breaking out above that 43 level at the moment. But again, a bit of a reversal today after that spike, so perhaps some of that warning is coming in. But it wouldn't be the first stock that we've seen here that has been able to kind of buck a bad earnings report and outlook with the idea that it was priced in, and certainly that sell-off on the stock from the 57 level back in early September all the way down to 36 there on the day after Christmas priced in some of this action, but hasn't broken out of that downward trend yet.
No, it hasn't. It's just kind of, I don't have the chart in front of me, but it was, it's been trending down, and then it did move up a little bit over the last month or so, but it's, I think it is a good sign if a stock does trade up on negative news. It reminds me of Western Digital,
right.
Maybe a few weeks ago. They had a horrible quarter, and I believe the stocks, traded up on that, and that's often a pretty decent sign that maybe, if you can trade up on bad news, that a lot of the negativity is already in the stock, and people are looking maybe 2-3 quarters out as a turnaround play. In fact, I'm looking at Western Digital, and that stock has done just nothing but gone up since I think they guided, not only did they miss, but they guided lower, and the stock is up from there. So that's a very good sign that the bottom might be in on names like that. That's just another thing to kind of keep an eye on.
Yeah, no, all good points. That semi-space has certainly been hot despite results. So let's take a look at two ads then in the GROWX list. The first one we got is Lending Tree, ticker symbol TREE. So now this debuted at the number 3 spot. Is that right, Robert?
I think so. I believe it was. Yeah, I don't have the rankings right in front of me, but it was towards the top. Yes. No, sorry, it was number 3 this week. You're right. I'm sorry.
Okay. Why don't you tell us a little bit about Lending Tree and why you like it then?
Yeah. So basically, it's a new ad this week. And it's funny, we rarely get triple-digit stocks. This stock is in the 300 range, which is kind of unusual for a new emerging growth ad. But it's a really good story. Basically, everyone's probably familiar with this. I'm not going to talk about it too much, but they're the online marketplace. So if you want to get a loan for a mortgage, basically it's a lead generator for banks and for other lending institutions. They don't actually take the risk of the underwriting. They don't take the credit risk. They just get paid on a per hit basis. Basically, there's somebody per loan. They get like a commission on each one. So they don't take the credit risk, but they do get the upside as long as somebody gets through the process. The thing about it is, historically they focused on the mortgage business, which is it can be pretty boom bust. It goes with the housing market, so it could do really well some years and then really horribly other years. And what they're doing is they're moving into a lot of non-mortgage areas, which I think is a good thing. They're getting into like personal credit, home equity lines, credit cards, auto loans, student loans, things like that, where so they can diversify their products that they offer. And so anyway, the numbers just look real good. This is another one where what Scott was saying, where the stock has been trending lower, and then it's kind of been picking up over the last month or so. It's because it was such a big mover that it did get hit with the when the market sold off late last year. So this is one that we do like it. I think it's kind of a little bit too stretched over the last month.
From about 200 to...
Yeah, it's kind of a little bit, but it's definitely one to keep an eye on pullbacks. Because I think that the story's good. I mean, we've been following this one for years on emerging growth. It's been on and off the rankings, but I do like the story, and they're getting just more into, they're not a mortgage play anyway. They do obviously have exposure to mortgages, but they do a lot more than that. So so they're doing really well, and they're huge. And you probably have also noticed they're doing a lot more commercials on TV, which they're pretty confident it's going to give them a nice tailwind in 2019. They've kind of beefed up their marketing expenses, so that should help them next year.
Yeah, it looks like they're set to potentially report in about 3 weeks. We have with them as unconfirmed, but we'd be expecting them around that February 21st time frame based on past reporting cycles. So the key thing that you'll be watching here, Robert, I assume, is growth in loan areas outside of mortgage, right? And
yes.
I believe they break that down in their press release, right? So.
Yeah, they actually make they're very direct about it. They break out their non-mortgage business from their mortgage business, because their non-mortgage business is really their growth engine. So they make sure to highlight that for investors. And another thing they do, just to quickly add, is they're pretty active in terms of M&A. Like they just recently bought Quote Wizard, which is like the largest online insurance comparison marketplace, and they bought ValuePenguin.com, a personal finance website. So they're really good at finding different products. Usually, they almost always buy non-mortgage products, and they sort of fold it into their overall platform. And they do a good job in that. And they make some smart purchases that way. So they're just a huge company at this point with all these acquisitions, and they're kind of the big name in terms of the online loan marketplace. And they do a lot of cross-selling. So people who go there for mortgages, they also might get a credit card there. And now, like for example, with Quote Wizard, well, maybe you might pick up some insurance on their comparison marketplace. So basically, they're trying to be the personal finance go-to place for consumers, and they're doing a good job at it. So I don't like it here. I'd like to see the stock pull back a little bit, but the story does look pretty solid.
All right. Next up, we've got QNST, ticker symbol QNST. Why don't you lay out what QNST does and what's catching your attention there, Robert? Nice looking chart too.
Yeah, the chart is great.
Steady upward trend and a breakout here. So I'm going to pull up that chart. Why don't you explain to people what you like about QNST?
Yeah, what they do is they're an online direct marketing company. So what they do is they basically go out and get sales leads for customers. So their core competency is in terms of like online advertising. They're like very sophisticated in terms of like search engine optimization and target search engine marketing, social media, email marketing, things like that. So basically, they go out and get sales leads for whether you might be selling cars or whatever you're selling, doesn't really matter. But QNST is great, and they get paid on a per lead or a per click basis, so they're just growing really great. And so I do like
comp for this.
At first, I initially I thought it was maybe Trade Desk, but I think Trade Desk is a little bit different. They're more in the actual ads and the buying and selling and supply and demand of ads, whereas I think QNST is a little bit different, where they're actually just going out and getting more just pure leads for companies. I think it's a little bit different that way. I'm trying to think of another exact comparison, and I can't think of one off the top of my head, but I'm sure there are others that are in this space.
All right. Now, obviously, we got to. This thing's run a lot, so it's nearly doubled here. You chasing it? How's the valuations at these levels, right?
Well, the funny thing is, like, I think LendingTree is more stretched than this one. That's what the funny thing is, because this one is. You look at the chart on it, and if you look at the fourth quarter last year, they're saying what sell-off in the market. This stock held up during that brutal selling period, which I always think is a good sign. I think the people are in it. They're not momentum people. They're people who understand the story and who like the story. They're willing to weather the storm with it, and they've been rewarded because the stock's been up even over the last month or so. But the fact that it just got through that storm without any hiccup at all was pretty impressive to me. But I can pull up the valuation right here real quick. But so they're about to trading at like $20, and what are they going to earn this? Yeah, the valuation is kind of high. They're supposed to earn 51 cents this year, so
yeah, 22
that is. It's not horrible. Yeah, for a tech company.
44 million float and 12% short. So certainly some people coming in here looking to short it, I suppose, on this run. But yeah, the valuation isn't that extreme.
It's not that extreme, and I like. I'm not a technician. Scott would know better than I do, but I do like how it's just sort of like steady. Yeah. During market sell-off, doesn't matter. Just keep steady.
Yeah.
And it just.
Well, I know Scott, and I know he loves these types of charts. So.
Yeah, to me that tells me that the people in it they know the story well, and they're highly supportive of it, of a long-term thing. They're not momentum people who jump in and jump out every 5 days, or even the same day. They're kind of, it's a different kind of investor that is in these kind of stocks. So that's another reason why I like it.
Yeah, 429 million in annual sales too. It's not a small company.
No, it's not, and they're profitable, and they're putting up nice growth, and a great balance sheet. They have 70 million in cash. Yeah, $1.34 per share with no debt. So I always like to see that, where they have a big cash balance with no long-term debt. So
yeah, especially, I know the rate environment's not rising as much, but I know the corporate debt issue certainly is an overhang for the markets here, and this is one that definitely falls in. And their adjusted EBITDA growth at 56% year over year in the last quarter is pretty nice, too.
Yeah. Now, I just want to point out, they do report next week, so
okay, that's good to know.
On the 7th, Thursday, after the close. So just, you may want to wait for that report to see where they come out, but I definitely think it's worth the name, keep it on the radar. I think it's just sort of like a slow and steady, and it doesn't seem like it's going to jump huge one way or the other, but it seems to be like if you're looking for more like a buy and hold kind of thing, it makes sense. But maybe wait till after this report, just to kind of, because December quarter was difficult for a lot of companies, so let's not. I kind of want to see what they do and then kind of go from there.
All right, and we're talking about getting help from our user base, and one of our subs is pointing out HubSpot, HUBS ticker, as being a comp for this. Have you come across them, Robert?
Okay. I'm not familiar with them, but I can look at them up and maybe get back to you the next time, but I'll have to. I'm not too familiar with them.
Yeah, that'll be something to keep in mind when they're reporting earnings too, right? So
that's a good point. Yeah,
we'll take a little look into that, but thank you very much to this sub that wrote in and gave us the heads up on that.
Okay, yeah, I appreciate that. Thank you.
The more the analyst community works together, the better we can be, right, Robert?
Exactly. That's the way to do it.
All right. Well, so another 3 good names from you. We're going to post them to the site here in a little bit. But any other insights, any thoughts on what you're seeing in the GROWX list in general? Has there been any themes that have been sticking out to you or anything?
You know what? It's funny. REITs have really been coming on a lot lately. We like a year ago, we'd have no REITs whatsoever. And now there's maybe, I'd say, good 10-15% of them are REITs. So I think it's just people looking for income ideas or looking to get away from the high growth areas, so they kind of look for income plays. That seems to be the trend that's kind of jumping on there. But other than that, but the thing of the GROWX is kind of, it's a mishmash of different stocks and ideas, and you don't always see trends with it. But anyway, those 2 that were on this week, and actually the 2 last week too, were names that I like. But they're definitely worth at least keeping on the radar. But probably wait till after earnings.
All right, there you have it. All right, well, Robert, thanks very much for joining us again. People are really enjoying this Friday afternoon session here, so we'll have to keep it up. We will be posting a recording to this to the site shortly. And Robert, anything else to add before we let you go?
No, I think I'm all set. Have a good weekend.
Thanks a lot, Robert. You have a great weekend too. We'll talk to you soon.
Okay, bye.
All right.